So what you're seeing here is the channel support and resistance chart for the S&P index. We are going to use this daily time frame chart to see when the price attempted to touch the bottom channel and to see if it held and bounced back higher, and the timing and price point for resistance from these bounce backs. As you can see, we had the first touch and dip in of support in late October 2020, which is followed by a rally into the end of the first week of November 2020. And then we ride the top 75% of the channel up until the end of January 2021, when we dropped more than 50% into the overall breadth of the channel. Then in the first week of March 2021, we have this perfect touch of the bottom of the channel, which is followed by revisits below 50% points in quick succession in mid-May and mid-June. This is followed by a perfect touch and bounce in mid-July 2021, and finally, latest here in the third week of August, when we dipped in, almost too close to the touch of the bottom channel and held, and have since moved higher. At this point, there does not appear to be any known resistance level for the broad markets, and a push higher into the 4600 level seems to be in the cards. Fundamentally, this is a Federal Reserve driven bull market, which does not appear to have the makings of any major correction, and even measurable pullbacks appear to have participants waiting on the sideline to buy the market right back. Let's now drop down to a smaller time frame, and what I'm using here is a Fibonacci rendering of a 10-day 30-minute time frame chart, and attempting to measure Fibonacci retracements off the bottom and into points of reversals. On Wednesday, August 18th, S&P futures markets dropped nicely lower after the 6 p.m. open. And overnight and into the US pre-market, we had a big gap down, which actually appears to be a major liquidation break. When the markets opened that Thursday, August 19th, we made a low of 4367.73 for the S&P. But by noon on that same day, we made a high of 4418.46, while pulling back late afternoon and moving higher into the close, much closer to that 4418.46 high. Then the following Monday, August 23rd, we gapped higher of the Friday close and opened at 4450.29. And into late that afternoon of Wednesday, August 25th, clocking a high of 4501.62, with buyers being unable to hold that high, only to pull back the entire day Thursday into a Fibonacci 38.2 plus and replacement at 4469.85, which you see on the chart. Then last Friday, we commenced a rally of the Fed Reserve Chair Jerome Powell's comments at the Jackson Hole virtual meeting this year, where he made no firm commitment of quantifying or providing a timetable for the reduction in asset purchases, and merely stating that they would begin tapering before the end of the year. That 38.2% fib retracement, which is the pink dotted line that you see, has a 4521.25 price target for the S&P, which we could tag very early in the upcoming week.